Let me just tell you right now, if you are not salivating, literally foaming at the mouth hole over the deal that you are buying Tesla stock at today, something is potentially wrong with you. Wall Street analysts have wrote their estimates for 2024 with a third grader's perspective. They don't understand Tesla. And let me tell you, there's very few stocks that you will ever come across that are this undervalued, but really underappreciated, underevaluated. Seems like all we get is good news, and we're right around the corner from a deal to license full self-driving. Elon admitted that on the last earnings call. Cybertruck deliveries and robotaxis. These catalysts are potentially 12 to 24 months on the higher end for robotaxi, and you're telling me you can buy Tesla down 40% from all-time highs? Is Wall Street smoking something funny that we should know about? Yeah, I think so. Let me tell you right now, my friends, the day of reckoning for Wall Street is coming right around the corner. Believe it or not, love it or hate it, bull or bear, it's coming. This is kind of comparable to wearing glue on your glove at the Super Bowl. You are stealing shares of Tesla in front of everyone else. And we report it every single day. And maybe that deal gets a little bit sweeter here soon if the markets do fall. That is to your benefit, my friends. Do not squander that opportunity. According to a recent interview on CNBC that happened on Friday, robotaxis, of all things, are going to become a fact of life for U.S. citizens. Let's go ahead and listen in and provide a little bit of context, commentary, and clarity to what they're saying.
Joining me now, widely followed Tesla investor Ross Gerber and CEO and president of Gerber Kawasaki, and big technology founder and CNBC contributor Alex Kantrowitz. He got the Cruise LA scoop. It's good to see both of you today. All right, so first of all, I have to ask, when you have robo-taxis going to LA, Alex, I would think like the rest of the cities are just going to fall in line. That seems like the big one to me.
Absolutely. So the thing is with these cars, the toughest thing was to get them operational in one or two cities. We know that both companies have them operational in San Francisco. There's been movement in Austin, movement in Phoenix. Now the real question goes from being a technology issue to being a supply issue. How quickly can they make these cars? We have both in LA now. I think that we're going to end up seeing this stuff expand faster than the general public is able to comprehend. And, you know, I was speaking with the CEO of Cruise, tens of vehicles on the road last year, hundreds this year. They expect thousands next year, and they're going to 10x every year after that. This is going to be a fact of life in the U.S. very, very soon.
You know, I saw something that looked an awful lot like that in Las Vegas recently. I've been to Arizona, and I've seen these cars that have been around in the greater Phoenix area. Ross, I mentioned the companies that are testing and where their testing cities are right now. But Tesla seems like the big one and the one that has really been pushing this envelope. What does this mean that these other competitors are coming in and landing the cities that say, yes, you can test them here?
Well, you know, what was just said by Alex is true. The cities like Austin and Phoenix, which are actually easy cities to actually drive, are going to be mastered a lot quicker than people expect. And these companies can expand in these like secondary cities, I think, very rapidly compared to LA. But I think it's really noteworthy to see Cruise coming into the jungle of LA roads where I've been training, you know, Tesla full self-driving for probably over a year now in the real jungles of driving LA. And so, you know, until you can drive LA traffic, 405, 101 in traffic, you know, you haven't really done anything yet. So I think there's this dual challenge between the technology being mass adopted, but also being able to master bigger cities and also continue to do it safely and scale, which is, I think, going to be more challenging than people think.
By the way, we polled our audience on Twitter, X. We're going to start saying X all the time, but we have to go a bit further so that I make sure that everybody is with me and knows what I'm talking about. 60% of the people who responded said they would not get into a self-driving car. Is that a problem for these companies?
That's actually some pretty good numbers. For 98% of America that has never seen a full self-driving car, almost 40% of people say they would get into a self-driving cab. Those are pretty impressive numbers. At least I would think so. My mom, she would never get into a self-driving car or use one, even though she hates driving. That's because she's never seen it. Pretty straightforward. So I think these numbers are pretty good, to say so myself. Let's see what Ross Gerber has to say.
Is that a problem for these companies? What do you think, Alex?
Well, yeah, I don't think so. And I'll admit, I was skeptical until I got into one for the first time last week. And I was nervous as we started moving through San Francisco. But by the second ride, I started to feel like this was a little bit normal. And the third ride, I wasn't even paying attention to the fact that the steering wheel was moving on its own. And there's absolutely nobody in the car except for me. And I wasn't driving. So I think this is going to be something people are going to have a little bit of hesitance to. It will break along generational lines. Also, younger people will be much more willing to get in than folks who haven't seen this technology, since they were born. But I do think that once people start to try it, and they will try it, that 60% number is going to decline dramatically, because my picture of this technology from where I was last week to where I am this week is completely different. I don't ever want to drive with a human driver again. I want to just be in these Waymo cruise vehicles. And if we can do that, and when we can do that, that's going to be much better for the rest of this entire country.
Interestingly, my executive producer told me before the hour began, not now, but never. He would never get in one, and I tried to make him put money on it, and he wouldn't do it. And it's on video too, so I have proof. But Ross, the other thing is, as these cars go out in these various cities, there's got to be a real cost associated with them, right? Because just for vandalism alone, I mean, we have the video that shows people messing around with these cars. So how do you get past that cost hurdle for the self-driving taxis?
Well, I think, first of all, 40% of people saying they're going to get in robo-taxi is actually an amazingly good number. Oh. Just to note, you would think it would be 95% of people would be scared, but actually a pretty decent amount of people are willing to do this right now. So I think that says something about where the technology already is and where it's going. But, secondly, somebody vandalizes a Tesla, for example, it's on video and the whole thing's recorded, and I can actually look at my Tesla live like a Ring camera in real time. So, being a vandalism is kind of going to be a thing of the past, I think. So,
now, I think this is pretty encouraging as well for Tesla if we think about this quite logically. You start to get Waymo and Cruise that deploy in different big cities. You have the evolution of full self-driving with Tesla coming to this Alpha V12 version that is going to be fully autonomous, as a lot of people expect, next year. This is the version of Tesla that can be submitted to the government for approval and start offering robotaxi. Now, the difference between Tesla, and this is the most important thing to point out, the difference between Waymo and Cruise and Tesla's full self-driving robotaxis is once they get government approval, it's going to be very easy to start rolling out basically everywhere pretty instantly. The scalability aspect of robotaxis being able to deploy in multiple states pretty much simultaneously is a massive advantage that Tesla will have compared to Cruise or Waymo. Tesla's full self-driving today drives more miles than Cruise and Waymo put together have ever driven. There is no competition to Tesla once Tesla does reach level 4, better known as Alpha V12 version. And my friends, my people, let me tell you right now, when that day happens, that the update to full self-driving is the Alpha V12 version, you want to have as many shares of Tesla as you possibly can. Now, this is probably a catalyst, if we're being realistic, about 12 months from now. That should be very encouraging, unless you expect to croak within the next 12 months, which should not be any one of you because you do not think negatively. you should be very encouraged with where Tesla is today. The fact that you can buy this stock at such a steep discount to where it's going to be 12 or 24 months from now should get your juices flowing more than anything else on this planet does. After all, maybe I'm just strange and buying stocks at ridiculously low prices just gets my juices going. I don't know. Maybe that's a topic for another video. But this is not to mention your near-term catalysts that are also going to have very much a positive effect to Tesla stock, and that is the delusional analyst and their projections for next year. So maybe you don't get to buy Tesla at a discount for that long. Wall Street is currently expecting Tesla's volume growth, aka delivery growth, to only be 27% next year. They're smoking stuff, guys. I can't make this up. The last time you've seen a new model introduced from Tesla was on March 13th of 2020, when the stock market itself was crashing due to the Rona, and deliveries jumped 85% year over year after that. And you're expecting 27% for 2024. Let me get this straight. The $7,500 tax credit starting on January 1st becomes an instant rebate at the dealerships. And this, mixed with the historical performance every time Tesla has introduced a new model or advertising or anything else that Tesla's doing, is not going to have any positive effect on its volume numbers. Wall Street is expecting the worst volume growth that you have seen in Tesla in over 5 years now. I believe, let me fact check this real quick. I believe this is the worst projected volume growth for Tesla ever. So I did fact check this. 27% volume growth would be the worst year for Tesla ever. It's never been 27% delivery growth on a year-over-year basis. You did get close between 2013 and 2014 when Tesla's deliveries grew about 30% year over year. Huh? Come on, I seriously just can't make this up. Now, the $7,500 tax credit, I think this is important to point out with a little bit more clarity. Instead of you getting this tax credit back as a break on your taxes, if you pay taxes, you will get this as a credit at the dealership. What this means is if you're a single mom and you get a tax return, or just anyone that gets a tax return, well, this does not help you currently to buy an EV. There's no incentive for you to buy an EV because you don't get any tax break. This $7,500 only is applicable if you pay taxes. Well, that's a huge incentive coming in 2024 on top of everything else. Wall Street is currently expecting about 29% EPS growth for Tesla. Over the past 3 years, you have seen EPS growth over 80% every single year for Tesla. So where do they even get 29% from? This would be very much a recessionary environment. 29% EPS growth, 27% volume growth, and it does not look like a recession's coming. But a lot of your Wall Street analysts refuse to raise their estimates. This is great news for me and you and I, that are actively buying Tesla. And a matter of fact, after all of the good news that we have gotten recently, your full year 2023 EPS estimates have fallen and actually have stayed pretty flat from a month ago at $3.40 per share. But over the past 6 months or so, they've actually fallen from that higher end estimate of about $3.60 per share that we previously reported on about 2 months ago. So estimates have been falling this whole time, even though Tesla massively beat EPS estimates when they reported earnings a couple of weeks ago. Your full year 2024 EPS estimates have been falling, which is strange. 3 months ago, Wall Street was expecting $4.84 from Tesla next year on an EPS basis. 1 month ago, they were expecting $4.88, and today, Wall Street is expecting $4.81. When Tesla blows these EPS estimates out of the stratosphere, that is going to make Tesla stock a lot cheaper if you value the stock on a PE basis. A lot of Wall Street, they don't care about Tesla's growth. They don't value Tesla on a PEG ratio, as a lot of investors do, you and I. We care about growth. I don't want to buy Apple at 30 times PE or a Microsoft at 33 times PE when they're not growing. I would rather buy Tesla at a 70 times PE that's grown their EPS in the last 3 years by over 80% every year. That seems like a much better investment. But Wall Street, again, is clueless and likely smoking funny stuff. So in the very short term, there could be some downside pressure to the broader markets as well as Tesla stock, as a lot of people are really overreacting to the jobs report that came out on Friday, the non-farm payroll report, which looks like the U.S. added 187,000 jobs. This is around the historical average. So if you look at this as far as history, it's not bad. But what a lot of your bears are saying right now is once you start to get under that historical average and you start to make a downturn in the amount of jobs that are being created every month, you tend to see a sharp drop off in your non-farm payroll report. And the trend looks down. Let's be honest. We went from creating 500,000 jobs to 300,000 jobs to 200,000 jobs. Now you're under 200,000 jobs. I just don't personally see the catalyst to give us this huge recession that some Wall Street analysts are forecasting. I just don't see it. Maybe I'm blind. Maybe I'm too bullish. But there's just nothing out there. Unless this banking crisis really comes back to bite everyone in the ass, I just don't see it. But in the short term, that's not going to stop Wall Street from being dramatic. It's just not. But there's reason to be a little dramatic because Apple just had its third declining quarter in a row of year-over-year revenue. This is pretty bad. Apple's seen its worst day in over a year. Apple stock fell almost 5% on Friday. Almost 5% for Apple is a very big deal. Now, as I said in the previous videos, when stocks fall on earnings lately, you have seen a continued sell-off in those stocks. It's almost like clockwork. You don't even have to trade earnings themselves. If the stock falls after earnings, buy puts. If the stock rallies after earnings, buy calls. That tends to be a pretty easy way to trade the last two earnings seasons. This sets us up for a problem when Apple is about 12% market weighting of the NASDAQ. This is going to put some downside pressure on your big tech stocks. Investors group Tesla in with those big tech stocks, even though it's quite different. It's trading a lot cheaper if you look at Tesla on a growth basis. And it's, again, growing. It's not like an Apple or a Microsoft that's barely growing, if not negative, year over year. Much different. And I think Wall Street will eventually figure that out. But in the meantime, it looks like all stocks could be in for a little bit of pain as the markets have rallied so aggressively. One would say unjustifiably so in stocks like an Apple, a Microsoft, so on and so forth. So any dip that you get, again, you should be salivating at the mouth hole. For any cheaper that you can get on Tesla is an absolute blessing. Because I think even if you look out 3 months from now, when the Cybertruck starts deliveries, that's going to be a big catalyst for Tesla stock. And it looks like analysts have a lot of work to do as far as catching up on Tesla. We report it to you every single day. the good news after good news after good news, they don't care. A lot of your analysts have no idea that Tesla is currently expanding into India, or that they just leased an office building for 6,000 square feet in India. And that likely by 2025, a mass market $24,000 EV will be available. Markets don't even have a clue. That is to your benefit, my friends. So this is exactly how you get rich in Tesla stock, and it's pretty simple. This is the secret sauce. You buy the dip and you hold. Now, I'm not a financial advisor. This recession that I don't see coming could come, and it could be really bad. It could be as bad as 2008. I don't see it. I can't build a bear case for it, especially not with what the government just did to reduce the student loan repayments by 50%, and to make people that make less than $15 an hour not even need to pay their payment. How do you go into a recession with 3.5% unemployment? What is the catalyst? I don't see it. But again, like I said, I'm not a financial advisor. I could be wrong. There could be something lurking out there. And Tesla could not grow 27%. 27% is like bare bones, just a bad year for Tesla. I don't forecast that with the Cybertruck being launched with 1.9 million pre-orders. It looks like Wall Street is very much delusional, and you don't get these opportunities very often. You can count them on less than one hand, like literally a couple fingers. The opportunities that you will get in your lifetime where you have the same information as Wall Street, but they don't quite understand it. I can only think of a couple of stocks off the top of my head, and that's Crocs as well as Celsius. You seen it coming? Wall Street didn't see it. So, long story short, I don't think this drop, if it comes, is going to last very long. And I think firmly 6 to 12 months from now, you will look back and say, I should have bought every single share I could at $250, because now Tesla's $500-$600 per share. Once you get licensing deals for full self-driving, once you get fully autonomous level 4, once you get the Cybertruck that is beating up analysts' expectations and the rest of the Tesla franchise that is thriving, once you get the $24,000 EV in India, these are all things that are not having an effect on Tesla's stock today. There's no good news from any of these things priced into Tesla stock. It's all about pricing in and future expectations. When Wall Street doesn't expect it and it happens, that's where the money is made. So, yeah, let me know what you guys think about this down below in the comment section. Do you think Wall Street's smoking on funny stuff? Let me know down below in the comment section. Hit the like button, as well as subscribe to the channel if you made it to the end of this video. If you guys also want to come trade with us live in real time, we have a hedge on Apple right now that I am very excited on. $400 could give a max gain of about $46,000 if that happens. If the markets do fall 10%-ish from here, that trade should hit big, and we take that money and put it straight back into Tesla. That's the plan, and that's what we're going for. So if you guys want to be a part of it, link down below in the description of this video. Nonetheless, enjoy your weekends. Most importantly, enjoy them weekends, and I will see you in the next one.